Welcome to the Personal Pension Radio Podcast, where you get unconventional insights into wealth building and retirement that actually work. Discover data-driven strategies and learn from a wealth of experience so that you can take your retirement to the next level. Now, here's your host. He was once bitten by a harbor seal, the income engineer, Kraig Strom.
All right, we're back on Personal Pension Radio. Personal Pension Radio, we're actually joined in studio for the first time by Steve Mahoney. Say hello, Steve.
Hello, Steve.
Fantastic. And we've got Pete Tentler in a random parking lot somewhere in Southern California, right, Pete?
That's right, Craig. Great to be here.
That's great. We are back on Personal Pension Radio. We're broadcasting live from the 95th floor of the Personal Pension Tower in beautiful South Corona. We are now clear skies. We had a big old forest fire over the weekend that just clouded this entire city in a nice haze of brown smoke. Had 1,000 acres of the forest around us just burning. So all is well now. But we're, again, Personal Pension Radio, what's it all about? Personal Pension Radio is all about helping you prepare for retirement, but not just building up the biggest possible nest egg you can have. The nest egg doesn't really matter as much as the income and the lifestyle we get from that nest egg, right? That's what we're looking for. So that's our goal. And one of the things that we wanted to do, one of my most look forward to episodes here is with Pete Tentler. He is a financial locksmith. Pete's a financial locksmith. He helps people unlock the value that's sitting inside their most valuable asset, being their house. Pete is actually a reverse mortgage advisor with Liberty Home Equity. Hello again, Pete.
Hello, Craig.
That's awesome to have you here. I've been looking forward to this one. So now we know that you're in a random parking lot somewhere here in Southern California. I always love to start off with a favorite quote, and I really love yours. Tell us what your favorite quote is, and then want to get to know a little bit more about you.
Well, it's something my father always told me, and that's able, affable, and available.
Now, you have to forgive me. I went to public school in California, so affable. Tell me what each one of these three means. Take us through that.
Sure. Able means that I am well-versed in my profession, and I'm able to handle everything and your questions that you need. Affable means that during the process of the transaction, you're going to just enjoy working with me. In fact, that's how I really build a good relationship with my clients and their advisors. But most importantly is available. And I work from my mobile phone. The mobile phone is always with me, late at night, even on Saturdays. That's what my clients like, but more importantly, what my clients' advisors like. They're always able to reach me.
Okay, that makes perfect sense. Able, affable, and available. And I have to say, Pete is very available. I think you take one day off a week, right?
That's it, just Sunday.
Tell me a bit about you, your background, as far as family is concerned. You've got a pretty cool family story.
Yeah, I grew up in the near suburb of Chicago, and I am the ninth of 10 children. So growing up, my friends was always friends with their older siblings as they were friends with my older siblings. And so I get the older generation.
So what did that family vacation look like? Was yours a station wagon, a minivan, or
yeah?
What
we were a station wagon. We were a Ford Country Squire station wagon. With
no way!
panel.
That is so stereotyped.
Yep. Absolutely, and we would vacation down in southern Florida. We had a vacation home down there, so half the family would fly and half the family would drive. But you nailed it. You nailed it.
Oh yeah, but you being the youngest, did you have to sit on the hump? Right in the middle there?
Yeah, there's a rear-wheel drive car, so yeah, I was always stuck in the middle.
You had to sit on the hump, right?
Yep.
Pete, was there wood paneling on that car?
Yes, there was.
I knew it. Hey, tell us a little bit about your education. Where did you go to school?
I went to school at Loyola University, Chicago.
Oh, that's awesome.
Yeah, it was a very good school. Learned quite a bit about life in general. But
how did you make your way to California?
That's a great question. So it kind of ties into our vacation home in Florida, being that the Chicago winters were so bad. I said to myself, why don't we live here year-round in Florida? So at graduation, I chose the company that had offices nationwide.
Oh, okay.
And that company transferred me to a couple times in Chicago, then down to Houston, then Oklahoma City. And then one day they said, we know you're not happy in Oklahoma City. We pulled some strings, and we're starting a reverse mortgage division in San Diego.
Wow.
And that was back in 1994, and all I heard was, I'm moving to San Diego. In 1994, I had no idea what a reverse mortgage was, but it didn't take long to realize that there were a lot of people that really benefited from the reverse mortgage.
Oh, yeah,
sure. They just didn't understand it.
No, for sure. I mean, there's been a lot of things created by the government, basically, or inspired by government prodding, and this has to be one of my favorite things. I mean, I don't generally say that about government-inspired programs, but this is actually one of those that has evolved and changed over time and has just continued to get better. So that kind of jumps right into this topic for today. But let me give the audience some background. Okay, so those who've listened to this podcast for some time now know that I'm working on 17 years in financial services. I'm a certified financial planner and chartered financial consultant. But you have to understand where my passion for reverse mortgage comes from. That I don't sell reverse mortgages. I don't make any income from reverse mortgages. The reverse mortgage is a financial tool that, if used properly, delivers just an amazing benefit to those who seek to understand it. And I have had just some of the most amazing experiences helping people change their lives, and it has been in large part many times due to the proper use of a reverse mortgage. And we're going to talk about why I'm saying proper use of a reverse mortgage. But I'll tell you this right now. My mother, my sweet mom, got her reverse mortgage. Was it just last year, I think, right?
It was just last summer, I think.
Yeah, just last summer. And Pete helped my mom. And my mom still loves me. She still cooks me dinner. And she says nothing but great things about Pete. So this is a mom-tested program, okay? Mom-tested program. So tell me, Pete, who qualifies for the reverse mortgage? And let's start talking about, what does the process look like? Who actually qualifies for these things?
Okay, great question. The homeowner has to be 62 years of age or older. Now, their spouse can be under 62 and still qualify. So the key is 62 years or older, and they need to have sufficient equity in the home, and the home must be their primary residence.
Okay, so this can't be done on a vacation house or something like that?
No, it has to be on their primary residence.
Okay, outstanding. What does the process look like? I mean, does a reverse mortgage take forever to get one of these things? I mean, is it?
Not at all. No, it's a pretty easy process. The first thing is that I meet with the client, and I meet with them in person, at their home, at their advisor's office. It doesn't matter. And then we determine what are their needs. So let's say they move forward with the reverse mortgage. We take the application, like all loans are. But then the added step on a reverse mortgage that's not found in most other mortgages is the counseling session.
Okay, wait a minute. I've got to go to therapy to get a reverse mortgage?
You need therapy for a lot of things, Craig, but I'm kidding. What the client has is FHA requires every client to attend a HUD-approved counseling session over the phone, and it's strictly about the reverse mortgage. They want to make sure that the client understands the reverse mortgage, they understand the upsides and the downsides, And really, that's kind of like another layer of security for the client. They want to make sure that what the reverse mortgage advisor is telling them is accurate. But it's a pretty simple process. Go ahead.
Yeah. So what you're saying, I mean, is that you can't just go down to anybody and just walk in the door and then 2 hours later walk out with a reverse mortgage where somebody just sets up their shingle to give people reverse mortgages.
Right. So the counseling session needs to be done, and that's usually it's almost always a phone conversation, and the phone call is about an hour long at the most.
Okay.
And they're just making sure that the client understands it, and sometimes they'll ask them some memory questions too.
Oh, just to
make sure that they're on track and they kind of understand what they're getting themselves into?
Correct. And they want to make sure that the reverse mortgage advisor is not putting them into something that probably isn't a good idea for the client in the first place.
That sounds like a fantastic idea. I know that in many cases, the people that I have talked to are not really familiar with even what a reverse mortgage is, and their only familiarity might be an ad on the radio that they've heard in the past. So there actually is a process in place then for them to have all of the relevant details and information before they try to move forward on something like this.
Correct.
No, that's great. See, that's one of my favorite parts about it. I did have to warn my mom when she was going to do her reverse mortgage counseling that there's no chit-chat. Just go through it simple. My mom just wants to chat with everybody. And I said, your counseling call is going to take 4 hours if you try and chit-chat. No chit-chat.
Yeah,
So,
it's a pretty simple process. But again, the client should want to have this just to make sure that the advisor's telling them everything is correct and that there isn't anything that they left out.
now that's
So it's
good.
kind of like belts. It's kind of like belts and suspenders. For the client.
Belts and suspenders. That's good.
Well, and that's good because I would imagine that a lot of people have a lot of questions. I mean, I hear people all the time that say things like, if you get a reverse mortgage, the bank can take your home, and these reverse mortgages are risky. Pete, what kind of things do you hear? What kind of safeguards are in place for people?
Well, let's start with that. First of all, there's common myths and misconceptions of a reverse mortgage. And when I meet with a client or with the client's advisor, that's what I usually start off with. Say, instead of telling you what a reverse mortgage is, this is what a reverse mortgage is not. So a lot of people think that a reverse mortgage is that the homeowner gets a check every single month, but when they die, we get the house.
And you're saying we being like the big
The
evil
lender.
bank, the big evil
The
bank.
big evil bank, right. And nothing could be further from the truth. So many times the client believes that's what it is, and it isn't. As a matter of fact, there are often times where it's the client's advisors that think that.
I actually have to agree with you. I have heard that before. I've heard CPAs. I've heard attorneys. I've heard a variety of professionals, other financial advisors, who they do not understand the reverse mortgage program and the safeguards and the process, and they just say things that they really have no business actually saying anything about it because they clearly don't understand it. And they've oftentimes done their own clients a great disservice by not at least helping them get educated.
Right, and that is so spot on. Imagine that your advisor doesn't understand it. Imagine the consumer certainly won't understand it if the advisor doesn't understand it.
No,
A real good example was about 3 years ago. I was playing golf in a tournament, and my opponent and I were talking, and I told him I was a reverse mortgage advisor, and he just turned a different color. He's like, yeah. You prey on old people. You're stealing from the children's inheritance.
You're the Snidely Whiplash of the financial world is what you're saying.
Yeah, and I said, no, Larry, let me explain to you exactly what it is. And as I was explaining it to him, suddenly he turned white. I mean, he looked very nauseous. And I said, well, you don't have to be embarrassed about this, Larry. He says, no, you don't understand. I've been advising my clients not to do this. I said, this is the last thing you should do. And then it dawned on me. I said, Larry, what do you do for a living? Larry's 71 years old. He's been an estate planning attorney for over 45 years.
Oh, wow.
And I said, well, it's not that bad, is it, Larry? He says, well, just last year I advised a client to sell their home before they do a reverse mortgage. And they ended up moving in with their daughter and son-in-law. And imagine that the son-in-law doesn't get along with the parents, so you can imagine what breakfast and dinner is like every day.
Yeah.
So I said, Larry, with a reverse mortgage, they could have kept their home and not have to burden their children and continue to live with dignity.
Pete, what do you think creates that unfamiliarity with the product among financial advisors? This isn't a new product, is it? This has been around for some time, hasn't it?
It's been around since 1989, but certainly, Steve, you're right. It's in the beginning, it was a little bit of the wild, wild west. So some lenders back then, before the FHA revamped the program, were making rules such as that. They would say, when you die, we will get the home. So back then it wasn't a good idea, but today with FHA, it's a much better program. It's a safer program with the counseling session. It's custom designed by the borrower, whether they get a monthly check or they get a lump sum or they just decide to leave it on a credit line.
Or as you've told me recently, you can have a combination of different things. You don't have to have one or the other, right?
Yep.
And
oftentimes people do a combination of all three.
And this is something also where, when we think back to the scary times of mortgage lending in 2005, 6, and 7, leading up to the recession, that was the wild, wild west. You had mortgage lenders lending people who were making virtually no money, $1 million to buy a condo in Vegas. There was so little regulation. Am I correct that the standards from one professional lender to another are uniform across this program?
That's right. Under the FHA program, it is, yes.
Yeah. So again, there's no, you don't get a different program going to a different lender.
No, that's correct. It's all going to be the same guideline based on their age and the value of their home.
Okay. I see. That's one of the things that I love about it. Actually, is I love the fact that there's nobody out there that can just make up their own program and overcharge someone, or it really has removed so much of that from the possibilities.
Right. Well, now there are non-FHA reverse mortgage plans.
Oh, that's interesting. Really.
Right. So you have a charitable equity conversion mortgage, which means that you will gift the home to the library or the university or the community center upon your death. And they will give you an annuity, but it's usually not... I talk to my clients about these options too, and they say no.
Gotcha.
So I've yet to find a client, in all the years that I've been doing this, I've yet to find a client that would see that the charity would be a better fit for them and their family.
But it's an option that's out there that people should know about, and you're not going to find that with just any advisor. That's what I found personally working with Pete, is that he's just going to have such a depth of knowledge that although the reverse mortgage is somewhat unknown by a lot of the people that we talk to, it's been around for a long time. And if you have just barely stepped into the reverse mortgage arena, you're just not going to be able to understand the nuances of this program.
Correct.
Yeah, it's just such good to know. So let me ask you this: as we talk about this, I mentioned, of course, that my mom is a single lady. She lost my dad. We lost our dad, back when he was 58 years old. Very sad. Lost him to cancer. So Mom lives alone in a nice little home that my wife and I helped her buy a house a few years back. And to be honest, we helped her buy that house with the specific intent that we would get her to a point where she could qualify for a reverse mortgage. Because if just to give a little backstory, my dad, when he died at 58, in the years leading up to his death, he was in very good health, and he, despite loving my mom dearly, he did not think that he needed any more life insurance or any more real planning, and that everything will be fine. He's going to live a long life. And pancreatic cancer popped up and, killed him in 6 months. It was pretty fast. So my mom was left in a financial position where she was never going to officially be able to own a home again. She would either have to rent or she would have a mortgage for 30 years. She was financially not in a position where she could own her own home outright. So what we were able to do is get her positioned with a home that she purchased with our help, and got her to the point where she was able to then get a reverse mortgage. So now she has no mortgage payment, no rent payment, and essentially just gets to live out her life in the perfect little house for the rest of her life under her terms. So what I wanted to ask you, Pete, is who should consider a reverse mortgage? Is this something that only people like my mom should consider? Or is
no.
This, yeah.
No, that's a great question, because a lot of people think that. They think that it's only for people that are house rich or cash poor. While that is true, but it helps those people. But we have clients that are all over the place. And what I mean by that is we have someone that is just looking to get rid of their mortgage. So now they no longer have a mortgage payment by replacing their existing mortgage with a reverse mortgage. Hey, that just freed up anywhere between $1,200 and $2,000 a month.
Oh, I've seen that with clients. I don't know how many times, I've lost track, where you get folks who are officially gone into retirement, and through sometimes personal financial decisions, but other times where they've had family trauma or emergencies where they were not able to get their house paid off because they were helping a child pay for school or a grandchild pay for a medical issue, and they ended up in retirement with a mortgage payment for the next 15 or 20 years, and they were basically just renting. And the reverse mortgage freed up thousands of dollars to be used to spend time with their grandchildren and go on vacation instead of paying for a mortgage that they would never pay off.
And that's an interesting way to think of something like this, because I think in most cases what people find is a reverse mortgage is looked at as a sign of desperation. It's a way to get out of a difficult situation. And what we're talking about here, and like Kraig, what you described, was actually making a deliberative decision with forethought that this is an opportunity to use the investment of a home as a vehicle for income going forward through the rest of their life.
Yeah, that's a good point, Pete. You've got, I'm sure, many different examples, but I guess what we're getting at is this just something for one particular demographic, or does this fit for a variety?
No, let me give you another example. A client that we helped out last year, Dr. Bernie. He's a retired optometrist. Bernie is 89 years old, and he's still driving his car. He is in great health. He has his house that's free and clear for $700,000. And he's got plenty of money in the bank, but he says, I'd just like to have a credit line established. In case I need the money, I have it. So we set him up on a really nice credit line for him to borrow money as he needs it. And as I was talking with him, he decided he wanted to borrow $21,000 to go to Europe.
Oh,
so
awesome.
He asked, so he said, I said, in 5 years, your $21,000, the balance will be this. It's not going to be that much. And he looked at me and scratched his head, and he goes, what about if I took $35,000? So I said, okay, $35,000, it'll look like this. And I said, Bernie, what's the difference between $21,000 and $35,000? And he smiled and he said, $35,000 is a first-class ticket.
Nice.
And I said, Bernie, for heaven's sakes, go first class.
Nice.
Your last run at Europe. And then he surprised me again. A few months later, he called. He said he's borrowing another $45,000 to give to his daughter and her husband as a down payment on a home.
Oh, wow.
And he said, why would I make them wait for me to pass away, for them to inherit the money, when I can share their inheritance with them now, and I get to see them enjoy it?
So, Pete, it sounds like there's some different ways that this money can be distributed, as opposed
Yep.
to just a lump sum or an annuity payment. It sounds like there's lines of credit as well that can be available to people for this.
Right. So if the home is paid off, it's free and clear or near free and clear, most of the clients choose the credit line option.
Okay.
On the other hand, if somebody has a very large mortgage on their home and the loan that we approve them for is just about the same as the mortgage, their current mortgage, then they just take the lump sum and pay it all off. But with the credit line, it's just that. It's a credit line that's good forever.
So let me ask you quickly, Pete, is that just a stagnant line? You know, I get X amount of dollars and that's the number I have forever?
No, let me tell you two folds about that. First of all, I think some of us remember when the banks cut off our home equity credit lines from 2007 to 2009.
Right. They were just canceling. They were just randomly canceling people's loans, right?
Right. This is FHA insured, so that will never happen. That's number one. So that credit line will never be compromised. But here's the bonus that not a lot of people are familiar with. Any unused portion of that credit line has a growth factor. So the credit line will increase every year between 4 and 5.5% a year.
Wow. That's actually really impressive. So if I'm not using it, the credit line just simply grows. So if we run into another recession, the credit line doesn't disappear if I haven't used it, is what you're saying as well.
Right.
That's powerful. That really is. And it's really exciting to hear you talk about Dr. Bernie. But think about this, and I've said this before. Those of you who might be listening to this who are seasoned citizens or heading in that direction, where you're looking at retirement, and think about your kids today. Really, do you want to live in the house and then leave it to them? Gosh, let's think about this. Do your kids really want your smelly old house? Or do you want to see them? Do you really want to see them enjoy life today? Do you want to maybe take your grandkids on vacation? One of my favorite reverse mortgage stories, Pete, you just reminded me of, was Clara. When I asked Clara what she would do, what she would do, she said, I would take my granddaughter to Niagara Falls. One of her favorite memories as a child was going to Niagara Falls with her grandparents. And financially, Clara was not in a position to be able to do that. She was struggling to figure out how to actually pay for the repairs on her car and get her dishwasher fixed. Within 6 months, she was done with her reverse mortgage and planning to take her little granddaughter to see Niagara Falls. And they've since taken her to the Grand Canyon, and they've done these trips now, today, instead of living out the rest of their lives financially strapped and missing those opportunities.
And having all that value of their home locked up into their house without access to it.
Yeah, no, absolutely. The one of the big questions that comes up, Steve was actually asking about earlier.
Yeah, Pete, one of the things that I've heard from folks who are critics of the reverse mortgage is that there are significant costs involved with that. Can you tell us about what some of the costs are that are involved with getting a reverse mortgage?
Right. You just have your typical closing costs of title, escrow, appraisal, the counseling fee. There is an FHA required upfront mortgage insurance premium. So you have all that. Now, if you have a very high mortgage balance, it's likely your closing costs can be costly. On the other hand,
costly is, hold on, if I may just jump in. Costly is relative. When this is not something that people should be, just doing on a whim, but I often wonder, let me ask you this, Pete, when does the mortgage company actually get paid?
On the maturity date, when the loan becomes due and payable.
Which happens generally when somebody either sells the house or dies, right?
Right.
So that could be a long time coming.
Right. And so those costs can be easily absorbed by eliminating that mortgage payment. So sometimes those closing costs, if you're saving $2,000 a month in a mortgage payment, those closing costs are paid back in 6 months.
Yeah.
Or less. Now take
ahead,
example, Dr. Bernie. When I met him, he says, I don't need any money. I just like to have access to it. So we tailor designed a reverse mortgage for Bernie with no closing costs.
Wait a minute, there is an option for no closing costs?
No closing costs.
Huh, okay.
Now, he pays for the appraisal and the counseling fee, of course, but other than that, what we do is that we raise the margin of the loan a little bit, little higher interest rate, and now he has no closing costs. And he's fine with that because he's not borrowing a lot of money.
Now, that's again, it goes to the whole idea that it's flexible, that it's a very flexible piece.
Well, and one point on that I wanted to ask a question on. Kraig just mentioned selling the house with a reverse mortgage. Is that something that's possible, or are they locked in forever?
It's possible. So let's use Bernie again as an example. His house is worth $700,000. We approved him for no closing cost credit line, and the credit line we established for him was $462,000. That's a lot of money.
That's a lot of money.
That's a whole lot of money. I want to go on vacation with Bernie.
He borrowed the $35,000 for that first class trip to Europe, and then he borrowed another $45,000 for his daughter. So it's $75,000 loan balance. It's say in 5 years from now, or even 5 years from now, he's 94 years old, and let's say Bernie leaves us. So his loan balance is $75,000 plus 5 years of interest. That's it. His heirs inherit the house. The house is always with the estate. The heirs sell the house for $700,000, and let's just say, for round numbers, that $75,000 balance is now $90,000. So the equity is left for the heirs to inherit. Meanwhile, Bernie enjoyed his last few years. He was able to share part of his inheritance, and he became financially independent from his adult children.
That's fantastic.
He never had to burden them for any help with any costs or repairs on the home. So that's another thing that people are making sure that they're using the reverse mortgage credit line to make sure that they don't burden their children.
And you've said it, I think you said it best. I mean, if you look at the house, and I've asked this question before of countless people, if you've got $1 million house, how much interest is that house paying you? Well, zero.
Nothing.
How much income are you getting from the house you're living in?
Zero.
So you've got $1 million asset sitting there doing nothing for you today other than providing a roof, right? And the reverse mortgage, that's why we call Pete the financial locksmith. He unlocks the key to all of the enjoyment, all of the fun and lifestyle for your grandchildren, for your children, all of that, so that instead of passing the house as a singular asset on the day you die, you can actually choose to enjoy some of that benefit and pass some of that inheritance now. Is that what that's what you were saying earlier, right, Pete?
Yeah, that's spot on. So you've unlocked that equity. You now have access to it. The unused portion of the credit line increases every year by quite a bit, especially if you start it young. And that can pay for some of your health care costs later down the road when you need the money.
Oh, that's an interesting description there. I heard on the radio recently and through an article that I read in Forbes that people can expect to spend $250,000 on health care and retirement. So that is a huge one. You can actually unlock this to pay for anything you need.
Yep, I have a client right now. She's down in San Diego. She's 78 years old, free and clear home. not an expensive home. It's only worth about $350,000. And she doesn't need any money. She's doing fine. But then I asked her, do you have long-term care coverage? And she said she's not eligible because of a stroke that she had recently.
Oh, wow.
So we looked at it, and I said, well, here we can establish a credit line for you of about $200,000. And as this grows, you'll have more money available to you. I said, at what age do you think you might need some in-home care assistance? Because she's never married. She doesn't have any children. She doesn't have any friends, or she doesn't have any family nearby to take care of her. And she says, probably 10 years from now when I'm 88. Now, this woman's really spry. She's probably going to be this way at 98.
So you're looking at a 10 years out. What did her number look like 10 years out?
Her number looked over 400,000.
Wow. That right there, folks, listen to that. Long-term care planning is one of the single biggest risks for your retirement that is often overlooked. And we just talked about an idea, a concept right here, right now, that those folks who may not be able to access traditional long-term care insurance, it might be sitting over your head in the form of the roof on your house, right? So don't underestimate your options. Got to talk to the right team of people, because it's not about one product being the solution. It's the strategy that you put together and how you use all of your assets. That's fantastic.
Right. And again, with Barbara, we did a no closing cost option. She paid for the appraisal and the counseling. There's no annual fee. There's no minimum draw. So she's happy just letting it grow all by itself.
So, Pete, we've talked about some of the positives here, and it seems like there's a lot of great opportunities with the reverse mortgage. There's got to be another side of that, too, though. When should people avoid the reverse mortgage? When might this not be the right fit for them?
Sure. There's been times where I walked into somebody's home and I would say, do not do a reverse mortgage. You need to sell your home. Because this is a home they've been in for a long time. They raised their children in the home. There's a couple of flights of stairs.
Oh, right.
There may be on a large lot, maybe with a swimming pool. Something that was good when you had the family, but now it's just you and your spouse. Maybe it's time to get the right-sized home for you.
See, you're describing my parents to a T right there. They live on 1 acre with a 2-story house. My dad is 67. My mom is 66. And we actually have been having this conversation the last week or so, and the thing that's come up is this the house that we want to keep you in for the rest of your lives? And I'm a little bit skeptical.
Mm-hmm.
You know, my in-laws, my wife's parents, we actually built them a small house. They're down here in Southern California with us, and we went to the trouble of making sure that the hallways were the right size so that if they ever had a wheelchair, I got hit by my mother-in-law for bringing up that option.
Right.
They would be able to have access. They were all single-story, full access to the home. But is that something that people should be looking at then if they're thinking about the reverse mortgage?
Absolutely. So let's, again, you guys are right on, spot on with this. Make sure this is the home that you're going to be in for years. And if you're planning on selling in 6 months or a year, or even if you're thinking about it, maybe that's a good reason that you should be doing that. Now, if you want to do a reverse mortgage on the new home, we can do that too.
Now, there's a piece that most people, I'd say, that's the biggest gap in the knowledge base regarding reverse mortgage. Pete, you might want to just touch on it, the reverse mortgage purchase, because what you just talked about is recommending that someone sell their home, and then the question is, now what do we do?
Right. So we can also help finance the purchase of a new home with a reverse mortgage. Now, when I say that to realtors look at me like I just landed from another planet.
Yeah, I've actually had that happen with a lot of professionals where they have no idea. Even long-term realtors have no idea you can actually buy a home with a reverse mortgage, and what happens to the equity from the existing home. You talk about, for example, right-sizing a house.
Yep. That's a great. I had a client last year, a couple in their late 60s, big house, swimming pool, everything. They wanted to downsize, and they only had $300,000 in net equity from the sale of their home. And the homes that they were looking at for $300,000 were either way far out from where they wanted to live, or it was a very, very small home.
Wait. So they were looking to buy another house with the cash from the equity in their current house. Is that what they were looking for?
Right, because they didn't want to have a mortgage payment. So that left them with the only option of paying all cash, and all they had was a $300,000 from the equity of the home. But when I met them, and I met them through their CPA, I showed them, I go, look, if you do a reverse mortgage purchase plan, instead of you buying a $300,000 home, you could buy a $600,000 home.
Oh, wow. So they don't have to settle for a smaller home.
Right. So when I was talking to the wife, I said, so what have you been finding for a $300,000 home? She says, well, we knew we would be downsizing, but all the homes that we were looking at, it felt more like we were compromising. And when they started looking at homes for $550,000, $600,000 that were in the same area as their children and grandchildren, they said, now this is right-sizing instead of downsizing. So with the reverse mortgage purchase plan, you can right-size without compromise.
I love that. Right size without compromise. That is an outstanding thing to remember, that if you're retired, the message that so many retirees have heard for the years and years leading up to retirement is you're going to have to live on less income. You got to be prepared to live on less income, and you're going to cut down on your, everything's going to be lower, and just plan on that. Well, that's compromising. Who wants to plan for that? That does not sound like an exciting option, right? And
right.
I love the idea that the reverse mortgage allows these folks to actually go out and get a home that makes sense near their kids, near their grandkids, and they still get to live in there with no mortgage payment and
feel good about it.
That's right. Yeah, that's right. So that's a perfect example of how the reverse mortgage for purchase helped, because they got to stay in the area. Now, Steve, I think you talked about what were the downsides.
Yes. What are some of the... Who should be avoiding this?
Let's talk about this couple that just did this right-size purchase. They have a daughter, Jen, and Jen's a early 30s lawyer, and she says, wait a minute, what are my parents getting into? And I go, look, Jen, here's what happens, is that when your parents finally sell the house or when they die, there's going to be less equity in there for you to inherit. That's it. And she looked at me and she says, first of all, this is my parents' home, not mine. I don't care what I'm going to inherit. And number two, I'm glad that they don't have to move 60 miles away and that they're still just a couple of exits up the freeway, because on the weekend we want to drop the grandkids off.
they need the babysitter close.
She said, my parents make the best babysitters, so we get a night off during the weekend. So you'll see that a lot of times it's the adult children that are behind this. They say, we think this is a great idea for our parents. They're the built-in babysitter. They are independent. We don't have to worry about them financially.
So does the concern about the lesser inheritance have more to do maybe with the parents and their concerns about giving than to themselves? That
generation, the baby boomer generation, the greatest generation, they still feel obligated to leave something to their children, when if you ask their children, most of the time the children say, we're doing fine, we want our parents to be comfortable.
Yeah.
And sometimes they may say, selfishly, we don't want to be burdened by them. So let them get the reverse mortgage and be independent.
No, that is so true. That's the parents want to leave an inheritance, but when you ask them which do they want more, they don't want to be a burden, or they want to leave an inheritance.
Right. So you know what? There will be something left over, barring that the parents don't live another 40 years or 50 years, or we have another housing market crash. Now, so there'll still be something left over. Now, let's say that there is that. Let's say they do live to 110, and the housing market crashes. And when they die, the mortgage loan, the reverse mortgage plan is upside down, meaning that the house is worth less than what the mortgage balance is.
Right.
This is FHA insured. It is a non-recourse loan. We cannot go after the estate, cannot go after the heirs for any difference.
The family just sends the keys back to the bank, and that's it, right?
Basically, yeah.
I got to tell you, though, that I know that sounds like a negative, but we've got to turn it back around and say that person lived to be 110. How much more enjoyment and quality of life and time with their family did they get during their lifetime? Instead of the family waiting until 110 years old to finally inherit that asset, they actually got to use it, enjoy it, and give it away during their lifetime.
Yep. Yeah, it's probably how they got to live to 110. So they were stress-free from a mortgage payment.
That's so true. Hey, as we finish up here, I've got just one quick final thought that I thought maybe you could share a story or two, kind of your favorite reverse mortgage story. Like we're sitting by the fireside with Pete, and just stories that all the years that you've been doing this. Maybe you've got some specific memories that you could just share briefly with us.
Yeah, there's lots of them, but one comes to mind recently was last spring. We were able to help a woman, a client. She was 51 years old on a reverse mortgage. And now I told you it has to be 62.
Yeah, so I was going to say, wait a minute, 51 years old, that kind of...
Yeah, well, Jan is 51 years old. She's married. She's got 3 kids, raising her family, but she's also supporting her 75-year-old mother.
Oh, okay.
So her mother, Pat's home was in foreclosure because Pat couldn't afford to make the mortgage payments anymore. Pat still works as a substitute teacher, but they've been cutting back her hours. And so Jan has been having to give her mother $300 or $400 a month to help out with the mortgage.
So daughter helping mom because...
Yeah.
Oh, wow.
So imagine... Jan's husband doesn't like this one bit. This money should stay with the family. So she's fighting with her husband. Pat's car has $800 worth of brakes and tires that need to be repaired. So she can't drive her car. Jan is driving her around once a week doing errands on her lunch break. And her boss told her, next time you take a 3-hour lunch, don't come back. So I'm explaining the reverse mortgage option to Jan, her mother, Pat, and Jan's CPA. And Jan says, this sounds great. What's the downside? And I said, well, Jan, in 15 or 20 years from now, when your mother dies, you're going to inherit less money. And Jan literally started pounding the desk and raising her voice saying, I'm not worried about what I'm going to inherit 20 years from now or even 5 years from now. I've got a problem today. I'm about to lose my job. I'm about to get a divorce. My mother's about to lose her home. And she's a little exaggerating, but I can tell she was very, very worried.
She's got to be out. She must have been at her wit's end after all this time.
She was. So we paid off Pat's mortgage. In fact, when I went to Pat's house, I saw her old Ford Taurus in the driveway with a brick behind the back wheel. And I said, how do you get to work every day? How do you get to the school? She goes, I take the bus. I go, well, the bus station, that's got to be at least a mile away. She goes, I take the school bus with all the kids.
Because the school bus is free.
School bus is free.
And
It's
closer.
right there in the corner.
How
Yeah.
deflating that
So,
must
like,
have been for her.
So we eliminated her mortgage. She kept all the equity in her home, kept her home. Now Pat has $1,600 a month that she in her pocket that she was paying to a mortgage.
That just
In
changes
6 months-
lives.
6 months later, she called and said, I got a problem. I said, what's the problem now? She says, what do I do with all this extra money?
That is the problem that Mom needed. And it took
She
all that
said-
weight off Jan.
She carved a little money out, and she started a college fund for her grandkids.
That
So-
had to feel good.
Pat kept the house. Grandkids got a college fund started. But more importantly, Jan saved so much stress in her life. So really, that reverse mortgage was for Jan.
I understand what you're saying there. That it's tremendous. It really is tremendous. And here, what we've seen just in this short interview, we've gone from two ends of the spectrum. We've got Dr. Bernie, who doesn't need a reverse mortgage, that he's doing okay, to Jan and her mom, where the reverse mortgage probably extended Jan's life by not causing her so much stress as a daughter taking care of Mom. Right?
Definitely.
And taking care of her own family. That she's part of that sandwich generation. That's that sandwich between her family and her parents.
Right. Well, I'll tell you what, this has been an awesome experience. And there's so much more to cover about the reverse mortgage and all the various ways that you can use it. The best thing we could probably do at this point, Pete, is tell people how they get in touch with you.
Okay, they can always reach me. I'm always available. My mobile phone number is 858-999-1776. And again, my name is Pete Tentler. I'm a reverse mortgage advisor with Liberty Home Equity Solutions. And again,
great.
It's 858-999-1776.
Excellent. All this is, as everybody knows, regular listeners to the podcast, this is going to be in the show notes. You can also, if you miss that, because you might be listening to this while you're driving or while you're running on the treadmill, whatever you're doing, you can go to personalpensionformulation.com. You can contact us through that website. You can just get Pete directly at 858-999-1776. Pete, this was awesome. Thanks so much for being here. Steve, outstanding to have you first time on the podcast.
Great to be here.
That will end it for now. We'll see you next week.
Hey, thanks, Craig. I enjoyed it too.
Thank you for listening to the Personal Pension Radio Podcast. If you missed anything during the show, that's okay. We took the notes for you. Check the show notes for links, offers, and a full transcript. And don't forget to head over to personalpensionradio.com and download your free retirement income report. While you're there, we'd appreciate some iTunes love. Please leave us a fantastic rating on iTunes by going to personalpensionradio.com/iTunes. Thanks again for listening.